Welcome to the program. Today we'll look at what's happening on the markets in the global economy. We're going to have a talk about gold, and we'll discuss what's happening with the changes to superannuation. I'm Peter Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
First question, Pete. Markets have had a very strong rally over the last week. Your thoughts on what's happening at the moment?
It's a pretty simple story, Marty. The US job numbers kicked them off. They were expecting 165,000. Along comes 287,000. Okay, the US is growing. Then Brexit scares the pants off the Poms. They're now going to cut interest rates. That's going to help there. You got if you go around the world, there's for example, Japan.
Stimulus in Japan.
Yeah, well, Prime Minister Abe, the upper house, did well in the election. He's going to stimulate. It's a whole stimulation story, and the central banks are worried about Brexit. So it's just a good thing for risk on.
Well, you can be sometimes cynical on numbers that come out of government authorities. Your thoughts on the payroll number? Was that? Do you think that was accurate? Because they do have revisions from time to time.
Revision to. April was, the number was just reversed from the previous month. So I think
a rogue number.
The 3 month numbers suggest that the US economy's got a little bit of momentum still, which is important.
147,000 jobs a month.
And the US is basically at an all-time high.
Yeah, US is full employment. I mean, you go over there, there are four hiring signs out everywhere. So it has been that way for some time. I think what people forget is that if people are saying the US couldn't get through this 2,100 mark on the S&P 500.
They were wrong.
Well, I'm not sure they're wrong yet, but at the same time, it hasn't been able to go much lower. And so what you've happened in the US is suddenly, as I said, you've got a good number. They haven't been able to sell it down, so it's got to go up. They are, the glass half full guy kings.
Are we past that? Are we past the Brexit issue now? Is that still on the table? I think is that gone?
I think Brexit. Look, the US Brexit. Who cares about Britain? Okay, I mean, let's get serious.
5% of the global economy.
This is the United States, right? We don't care what happens about the parts of Europe. So I think that was part of it. They got over that quickly. They, as I said, they are the glass half full guys. They're born optimists. The market hasn't been go down, so it's got to go up. I think now what's really critical for the US is earnings season, and so we started that. Now we're going to need some good numbers here, but if that continues, this market can go up. If the earnings come in below par, then they'll reject it again, and we'll slip back down.
What's
again.
the market PE on the US market? Paul?
Well, it's about a forward number of about 16 to 17 to 1. So it's on the high side, but interest rates are, 10-year bonds are 1.4%. So what's the choice, I mean...
And they're not going anywhere in a hurry either.
They're not going anywhere in a hurry. So I think it's good signs in the US.
Okay, so let's talk about one of your favourite topics, Paul, or one of your least favourite topics, that of gold. And you've possibly changed your view on this asset class, which is really a hedge for sort of uncertainty in the world.
Well, I think for all of our readers who read Charlie Aitken's views the other day,
the Switzer Super Report, our sister publication.
Yeah, I mean, and Charlie made a good case for why gold should be about 5% of your portfolio, not 50%, but there's obviously a lot of asset modelling out there to suggest, that having something in precious metals makes sense. Charlie's view is just really straightforward. Negative interest rates, gold's going to stay attractive. It's a long-term bull market, it's his view. I think I've been looking at gold. I haven't got there. I've been a gold bear for some time, but it's hard to argue with interest rates not going up. I mean, you've got to think people are going to want things.
Pete, your view?
Things like
gold.
Look,
my feeling always is if I don't understand it, I don't really like investing. It's like going to the races and taking a tip from an expert, and the horse always gets beaten. But gold, I think, if I was going to buy gold, I wish you'd talked me into it a year ago. Hopeless. But now
up about 20% year to date.
Yeah, I do. But by the way, silver's up 17% since June 23. I think there's upside.
And the best way to get exposure to gold, Paul, ETFs, gold companies.
Yeah, look, gold miners are the most leveraged, but they've gone through it. I mean, Newcrest, for example, has gone from under $10 to about $26 in the last 9 months.
I've once held that. It's a dog company.
So gold miners are the most leveraged. So if you're a real risk taker, go for the gold miners. But I think they're pretty fully priced for what they're trying to do. ETFs is one way. There are 4 ETFs listed. The other way is just through the Perth Mint and a couple of other bullion providers. They've actually got
ABC bullion as well.
You want to whack it in the safe, or you leave it over there?
No, you can buy it online. So I'm looking. My answer to the reason.
But they store it for you?
Yeah, if you want to.
$700,000 for a 12-kilo slab.
Yeah, I'm just going to write. I've got that in free change. But just to go back to gold, I mean, I think if this market rallies in the US, the gold price is going to come down, and that may be the opportunity as a bit of a defensive protection to start to look for an opportunity.
Let's move on. Next topic: super changes. Stories out today. Malcolm Turnbull plans to stare down the Conservative MPs that are asking for changes in regards to super. Pete, do you think he will make any changes? And if so, which changes should he make?
I don't know if he will. I think he's going to try and play tough guy now after looking like a bit of a wimp during the election campaign and before. But I think the Senate's going to make him do it. If I was a Labor politician or a Green, I'd make him do some changes because particularly the $500,000 lifetime cap on non-concessional contributions.
And the $25,000 cap as well. That's not beneficial for the majority of Australians.
That's right.
That's very hard to change without giving away all the revenue. That of the revenue measures, that generates the most
cap,
revenue.
25,000.
I guess you've got to pick on young people, I guess.
Yeah, I mean, pick on politicians themselves. They'll all be over the cap with just a standard politician will exceed that.
But caps do change a lot too. The caps have been 50,
Yeah,
they've been 35, they've been 25.
They're budget election issues.
Yeah, so it's always a metric that the government might change to win votes.
So we've argued that cap is too low, and it's still 25,000 is too low. I don't think he'll change that, but I think what he will do is two things around the 500,000. He'll remove the element of so-called retrospectivity, which you can argue whether it is or not, and bring the start date up to probably the 1st of budget night or the 30th of June 2016. I reckon they might increase to 500,000 a little bit. Yeah. That will probably get it through with the Labor Party.
And they'll change the starting date from July 2007 until the budget.
Well, probably to the start of the 1st of July or 30th of June.
That's all we've got time for. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.